So, types of blockchain. We've been talking about blockchain, and I'm sure that you've heard a lot about blockchain for quite some time now. But there are different types, and I only have a few of them listed here. There are different types, and this is changing on a almost continuous basis. So it's important to keep yourself up to date. So a public blockchain, which is basically just a public blockchain. Anybody can access it and to see what's going on the blockchain. It's pretty much what you would think of if you think of Bitcoin or other cryptocurrencies. It's a public blockchain, meaning anybody can join it, and anybody has the option to go back and to trace a certain transaction or a certain purchase all the way back to the beginning. Or a private blockchain. And so here's where most of the investment on the corporate side is actually happening. And I know that Walmart had recently introduced a blockchain that beginning in 2019, they are going to force their food suppliers to use. So here's a perfect example of a private blockchain developed in partnership with IBM that Walmart has put into place to help them better track the flow of foods and goods in and out of their business from their suppliers all the way through. And then third, and lastly right here, it's almost like a hybrid, right? And in here, this consortium model of blockchain, it can be a public permissioned blockchain, it can be a consortium blockchain, or it can be called a federated blockchain. I mean, all three words are used almost interchangeably, and while they are not specifically the exact same thing, if you are hearing those terms, here's what it basically means, is that while anybody or a large group of individuals or institutions can join a blockchain, that only a certain subset of users. Now, it can be the 5 biggest users, it can be the first 5, or it can be the 5 companies that are putting the most into actually maintaining the blockchain itself in terms of upkeep and of maintenance. Only those users or that subset of users have the capability or the authorization to approve and to validate blocks. So it's open to almost everybody, but only a certain subset of those users have the ability to actually verify data. So it's almost like a hybrid. But again, those are the 3 biggest blocks. Or if you're having a conversation with a person who is not who is super technical, or who's interested in those technical differences, is that basically a public blockchain is thought of almost as the ideal version of what a blockchain was, right? It was a decentralized, a distributed model of how people could join to share, transmit, and store data. And it was open to anyone to join, free to download, completely decentralized, right? Or not under the purview of any government agency or centralized authority, and is also most commonly what people actually think of, right? When they think of blockchain, even though, as we just saw, there are hundreds of blockchains out there and different categories of blockchain, the idea of a public blockchain still is what dominates the whole conversation. And it does that because this is what the Bitcoin blockchain actually runs on. Like Bitcoin blockchain, it's the biggest one, it's the most well-known, and it has the most action on it in terms of media coverage and financial analyst interest. So the public blockchain idea is what dominates that conversation. But if you're talking to somebody, a good way to explain it, or to even hang it up in your office somewhere, is to basically think of it like a giant Excel sheet. That's a storage place for information that anybody has the option to add data. Now, as this information is added, it does have to be approved and verified by other members, but anybody has that option to go ahead and to upload that data. And all of the information, and again, I'm focusing on the Bitcoin blockchain. To add any data onto the Bitcoin blockchain, over half of all existing members have to approve each and every block, which we're going to get to in a few minutes, is also one of the pain points. Because it requires a lot of energy and service to verify this information. So it's not a real cost-effective method to upload data. But it is the one that is used at the Bitcoin blockchain level because it's the most secure and the most encrypted. Okay, so if we're trying to actually break down what a private blockchain is from a business point of view, but then again, here is where most of the action is happening in terms of investment and development and all the rest in this whole blockchain space is on the private blockchain side. Because a private blockchain is really not a pure blockchain, right? Because it's not totally decentralized or distributed in nature. And the core difference is that as part of a private blockchain, there's always going to be one organizing firm, right? That actually writes the code, hires the programmers, and writes the rules as to how this blockchain operates. So in our earlier example, Walmart is a great illustration of how a private blockchain is actually being used. In that, even though it's a blockchain and has a lot of the core characteristics of a blockchain, it was in fact organized by Walmart in partnership with IBM. And so Walmart is the organizing firm, writes the rules, and then chooses who can be a part of this blockchain. And so that really changes the entire conversation in terms of how a blockchain works, because on a public blockchain, in order to verify any data as it's uploaded, there's a lot of computer science, hashing, and all sorts of hardcore math that has to go into that process, because nobody necessarily knows anybody else on that network. Whereas on a private blockchain side, there's a higher level of trust. Like again, in the case of Walmart, they're adding their suppliers onto their private blockchain, but they already know who their suppliers are. So there is that higher level of trust. So the actual adding of blocks of data onto the blockchain can be done in a more energy and time efficient manner versus that proof of work idea that underpins the Bitcoin blockchain. And a good way to sort of envision it, or again to have this conversation, is to sort of think of it like a giant Google Doc, that if you're the organizing firm, you can create the doc, write the document text, then invite other people to have access to this document. But you can basically choose who has what rights in this document. And it can either be thought of as a Word document or as a Excel type document. But if you're the organizing firm and you are inviting other people to join your network, you can grant them view only access, edit only access, or a comment access. And that's pretty much what a private blockchain is, right? Is that as the organizing firm, you have that optionality and that authority to actually let people into the network if you so choose. Okay, so a common question that I get asked quite a bit as to how it has to do with private blockchains, and I was first asked this by a attorney actually, and the attorney asked me, is that, okay, fine, if we're on a private blockchain and everyone knows who everyone else is on this blockchain as opposed to being on a public blockchain, does that mean that everybody has access to everyone else's data? And the answer is no, right? And all of this comes down to the importance of the organizing firm having the resources and the technical expertise to actually write the code and to program the blockchain in such a way that even though the other members are part of the blockchain, they only have access to their information. So a good way to a good analogy for this almost is to think of it like this. you have a bank account that you can access either in person or online. But even though you have access to your bank account information online, and your bank has thousands of other customers, you, on your end, only have access to your information, right? That's fundamental characteristics of online access of data isn't going to change, right? Even if it moves off of a traditional network onto a private blockchain. The only access to information you are going to have as an individual or institution on a private blockchain is to your information. Okay, so after all of this great stuff, and I'm sure all of you have seen headlines, heard the headlines, or even had conversations either inside your firm or outside with your clients as to, hey, listen, is this whole blockchain idea right for us? Right? But there are some costs that are going to be associated with this. And there are also costs when it comes to how to learn about this too. So obviously, the bulk of the investments and applications right now are being put to work at the Big Four and at those large multinational levels, right? IBM is a big player in this space. All of the Big Four have launched blockchain labs and have actually joined forces to create almost a pilot program for audit confirmations for a group of Taiwanese banks. So all of that is very interesting, and it's still a evolving story, but all of the Big Four are heavily invested in this space in terms of white papers, lobbying, and actually rolling out pilot products themselves. So obviously all of that is going to start there. But even though the applications are going to probably start at that higher level and then eventually make their way down to the mid-market firms, you and your firm and anybody else who you know can start learning more on these topics right now and actually get hands-on practice in this space. There are blockchain networks that are free to download online, which we're going to touch on in about a minute, but there are also massively open online courses, MOOCs, right? There are massively open online courses that are free to use, to download, to experiment with. And it's also important to keep in mind that a big chunk of the costs that are often tossed around in a blockchain conversation usually have to do with either mining or some other proof of work verification that has to do with the Bitcoin blockchain. Now, obviously, there are always going to be costs in terms of hardware, software, and then hiring people to actually do the coding to set up your blockchain. But in the broader conversation, in terms of the power demand and the hardware demand, a good chunk of that conversation has to do with mining for Bitcoin or for other cryptocurrencies. So it's important to always separate actually what costs you were talking about. So if you and your firm or you and your firm's clients are indeed having that conversation now as to how to actually set it up, and here is a very basic overview of how to set it up, there are some steps that you have to keep in mind. So after you have actually gone through and analyzed and determined that a blockchain solution works better than your current technology, which I do want to point out is not always the case, then basically the first step is to go through and to pick what kind of blockchain you actually want to use. Now, I would say that for a corporation or a business, it's going to almost always be a private blockchain or a federated blockchain or a consortium blockchain. So first of all, go through and to analyze which one you want. And there are some options right here. Ethereum is probably most known right now for the building out of smart contracts, which we'll touch on in a few minutes. But it's primarily known for that right now. And then there's also Ripple, which was basically built and designed to transmit money. It was built for financial institutions to be used for financial transactions. And then a third one that I've come across is Factom, who was designed and built to basically cut down on some of the inefficiency, time delays and paperwork hassles that can often come with mortgages, title searches, or insurance claims. So there are hundreds of different blockchains out there. So the first step is to go through and to analyze which one you actually want to use. Step number 2, basically, is to actually download the operating system. And it is possible to download most of these blockchains at their open source. So it's possible to then download what has already happened for free. Then it's up to you and the firm to hire programmers and coders and other functional experts to make sure that it can integrate with your other technology platforms. Then, if you are the organizing firm, after you've chosen your blockchain of choice, downloaded it onto your operating servers, and actually have it set up, then it's up to you to invite other institutions to be a part of your private blockchain. And it can be suppliers, it can be some clients of yours, or it can be lenders, creditors, bankers, or it can be your audit firm. So here's where basically you as the organizing firm have that optionality to invite different groups and actually grant them different levels of access. And then the last and final step, after all of that is done, you and your programming team and your IT team, both inside the firm and the experts that you've hired to help you, can then build out, customize, and tweak this individual blockchain option to whatever level of functionality you see fit. And right here we do have some of the links for Bitcoin, Ethereum, Ripple, and Factom. So if you want to learn more on any of these blockchain platforms, take a look at their free versions, take a look at how the platform looks from an operational point of view or from a user interface point of view. All 4 links right there have that data for you. But also just a quick note, if you are downloading anything off of the internet or installing some kind of new operating software, it could be blockchain or any kind, always be sure to have up-to-date antivirus and to make sure that you have training at that staff level to also make sure that everyone knows to not click on links that are from people that they don't know, or to open files from individuals or institutions that they don't normally do any business with. Okay, so now, sort of drilling down into some of the actual companies that are working on this, it's important to recognize that really every major big technology company out there, from Microsoft to Google, Amazon, and of course IBM, is a huge player in this space. Pretty much any company that offers a cloud solution for accounting and finance is also working on a blockchain solution at some level, or it's at some phase of development. And they're all basically working on the same 3 concepts, right? Making it bigger and more applicable for business use, right? Faster, more efficient, cheaper to use, making it more affordable for companies of all sizes to actually use. And last but not least, they're all developing better interfaces, right? So that it's actually easier for firms to use. So, if we then turn back to the accounting and finance space, right, where's the impact going to be first? And sort of this whole conversation around technology, automation, and AI was sort of kicked off when, in May of 2016, KPMG partnered with IBM Watson to start automating pieces of their audit process. And all of that has been going on in the background ever since, right? There is a underlying trend that technology is going to impact every aspect of accounting, tax, audit, and finance going forward. But it's also important to recognize and to keep in mind that even though all of this is coming and it's coming quickly, that it's not going to happen overnight, right? Now, that isn't to say that it's an excuse to not focus on it or to not be aware of it, but you do have time, right, to do some training, to educate you and your team, to also get a handle on the costs and the budget that you are going to need to actually get these projects up and running, and to also sort of build them out to a certain point where they actually have some commercial viability. So it is coming, but I would say that there are some places or some pieces of the business process where the impact is going to be felt first.